Hello and welcome to any other replace video approximately XRP. Yeah, the XRP chart has been transferring sideways all week, so it's no longer virtually the most thrilling chart short time period you would possibly assume. However, I think we are very close to some kind of a breakout and a decision right here. Essentially, the market has to make a decision. We come close to the end of this capability triangle sample, so we're going to speak approximately that, as continually we take a look at the chart from an Elliott wave factor of view. It is a sentiment-based, totally analysis approach which tells us approximately the most, in all likelihood, scenarios. For now, we're looking for better costs on the XRP chart. However, that doesn't mean the initial breakout wishes to be up. We may want to truly see a small move down earlier than going up. However, basically, so long as pullbacks, so the movements to the downside are corrective in nature, because of this we have overlapping systems, gradual actions to the disadvantage, essentially counter-trend actions. Yeah, we are able to maintain to watch for higher charges. It's also important that the market in those pullbacks, in those corrections, is protecting above key assist tiers. And what are these stages and what are the breakout factors? We want to talk about that in this video. First of all, for the time being, the idea is, and that is the primary idea, that a triangle pattern finished here at the 13th of January. So from an Elliott wave perspective, there are one-of-a-kind labels that we can apply right here to a triangle. In a triangle, we are looking for a 5-wave circulate. We have wave A whole, which bottomed at the 10th of December. The B wave was a corrective rally which fashioned the pinnacle at the 17th of December. The C wave to the downside shaped the low on the 20th of December. The D wave to the upside fashioned the pinnacle across the 4th of January, and the E wave completed here. Important is that it is a chain of better lows and lower highs, and then we were watching for a breakout to the upside to all-time excessive territory which occurred, but there may be no wreck above all-time excessive, yet at least no sustained break, and this is in which we are now, and I see the circulate to the upside as wave 1 again. That's wave certainly one of a bigger 5-wave circulate. So wave 1, we are now watching for a wave 2, then wave 3, wave 4, wave 5. This isn't always the clearest microstructure, at least now, not the flow that happened after the 13th of January low. So we ought to be prepared for adjustments. However, this is presently what we are looking for. And based in this microstructure, which is based on an Elliott wave sample, basically a 5-wave pass, which indicates in which route the fashion is going, we get Fibonacci support areas and/or ranges, and those Fibonacci degrees, they tell us what the market must do or should not do. So on this situation that we are tracking there, on this bullish state of affairs, the marketplace should not wreck beneath the container. So we don't want to see a ruin under 252 loss. It might be too low for this situation wherein the wave 4 already bottomed on the 13th of January. That means any spoil under $2.52, in particular, if it is a decisive ruin, would possibly trigger an opportunity situation. In this case, we would expect that the bigger wave 4 continues to be unfolding. So it'd introduce quite a few uncertainty, and which means the 252 degree is our warning degree, but it would not always mean that it'll crash down. We may simply see a slightly decreased low in blue wave 4 earlier than we then go up, or at least earlier than the marketplace attempts another turnaround to the upside. Now, looking on the shorter time frame and just zooming in, you can see a white and a yellow roadmap. So they may be each based on the idea that the wave 4, the bigger wave 4, formed the low at the quit of the triangle at the 13th of January. And the yellow situation lets in for the translation that we are protecting now, above the last swing low that fashioned on the 20th of January at 281. But even right here, after this type of triangle, the exclusive ways how This could be interpreted, we would see a circulate down and then move up more directly. I suggest, essentially the final key level, essential level is that 280 levels. We can look ahead to the yellow state of affairs. You recognize, as long as we're protecting that level, we are able to watch for higher costs directly. Don't be amazed if there may be a spoil underneath that degree at 280. It could, in reality, imply a barely decreased low in wave 2 in a larger wave 2, but this is all just surely noise. This isn't so vital. Important is that the marketplace holds above $2.52. And if the marketplace breaks out to the upside, we're going to watch for the 4.20 level as next upside goal. And then there is some other key stage, every other Fibonacci extension across the $5 mark. These would be the next levels. This isn't always maximum, but those are the following levels that we have to watch. Anything in addition away will introduce simply numerous uncertainty. It's now not so clear at this stage, but you notice that the marketplace is actually coming to the give up of a nearby triangle right here. And a breakout is, for my part, forthcoming. But endure in thoughts, it is weekend. Sometimes the volume is low on the weekend. We won't get very decisive breakouts, so it might simply spend a chunk of time dancing on that aid area until subsequent week. That's the replace about XRP. Hope you preferred the update. If you probably did, please hit the like button, go away a comment, and subscribe. And if you in reality just like the content material, then please check out the channel club.